Members, good morning. It's already the appointed time and we formed a quorum. Information papers issued since the last meeting held on the 7th of November. We have got one. For details, please refer to our agenda. It's for members' information. Do members have any question on the information paper? If not, then the second thing on the agenda is briefing by the Financial Secretary on Hong Kong's latest overall economic situation and the 2023-24 budget consultation. The paper has been issued to members. Can I first invite the Financial Secretary and his team to join us? Good morning, Financial Secretary. Secretary, when you are ready, you can start. Chairman and members of the panel, good morning. I'd like to give a briefing to members on the overall economic situation for Hong Kong. Because of the local pandemic and also the external environment, the economy has performed relatively poorly this year. Now we have to control the pandemic locally, and we need to revive our economy as soon as possible, and we need to have across the cycle perspective, and we must make good use of our own advantages and develop new areas of growth so that we can grasp the long-term opportunities. Now for our economy, with a slackened global demand and deteriorating external environment, our third quarter, the Q3 economy performed even worse. In the third quarter, there was a contraction by 4.5% and also export lower by 2.6%. So overall, the economy has contracted by 3.3% for the whole year. The external environment has continued to worsen. And then because of continued disruptions to cross-boundary land cargo flows, our exports have been dealt a serious blow. In the third quarter, the year-on-year total export of goods plummeted by 15.6%. In October, the performance was still weak. Overall exports in the third quarter fell by 3.8% in real terms. Now, export of travel services, thanks to the relaxation of testing and quarantine arrangement for visitors, we have seen a lot of growth, but then it is still far below the pre-pandemic level. Major central banks have imposed interest hikes, and that has impacted on demand for exports. Now, our labor market has stabilized, and then the consumption voucher scheme has provided support for local consumption. The third quarter was roughly the same as the situation last year, but there was a quarter growth. And then the investment expenditure saw a widened fall of 14.3% in real terms. Taking into account the figures for the first three quarters and the poor for outlook, we believe our economy will shrink by 3.2% overall in the year. However, seasonal adjusted unemployment rate fell from 4% in February to April to 3.8% in the third quarter. We have seen a fall in unemployment rates in all sectors. Unemployment rate improved to 1.7%, and then we have seen a year-on-year growth in real wages in real term. And then the overall inflation is modest, but for prices such in clothing and footwear, we've seen some growth. The inflation rate is about 1.8% for this quarter, and for the average figure for the first 10 months of the year, 1.7%. Now, the local core price pressure is moderate, so the inflation outlook is mild. We expect that the underlying CPI will be around 1.8% for this year. For property prices, now we have tightened financial conditions, and because the global economic outlook is not optimistic and our market sentiment has been prudent, we have seen lower transactions for the first 10 months. The average transaction per month was about 3,500, lower than the 4,200 last year, and much lower than the average of about 500, 2,000 in between 2017 and 2021. Property prices fell by 8% in July and October because of higher mortgage rates. In the third quarter, the percentage dropped by 73%. So members of the public have to assess relevant risk because of uncertainties. Now, at end September, we expect that in the coming 3 to 4 years, first-hand residential properties supply will remain at about 9,500 flats. That's a very high level. The government will continue to enhance speed and quality in delivery of land and housing so that we have a stable supply of land and housing. Will ensure orderly development of the property market. Now, the weak economy has dampened our property market. In the third quarter, transactions were much lower than for the first half of the year, and then rental levels were stable. Global economic outlook. Because of a number of factors, the market expects that the global economy will continue to weaken, and for inflation, it will remain high. So major central banks have to continue to increase interest rates, and then this will continue to dampen the economy. Now, because of the Ukraine situation, now global economy has been affected. IMF in October projected that the overall global economy growth will fall from 3.2% to 2.7% next year. And there is a warning that about 40% of the economies will see contraction for 2 quarters in a row. The mainland economy improved in the third quarter. However, the growth was affected by a slackened external demand and rebound in the pandemic situation in a few places. Now, the mainland economy is very resilient, and the authorities have launched a number of measures to support enterprises and stimulate investment. It has also improved its pandemic control measures. I'm sure there will be modest growth in the mainland economy. According to IMF, the economic growth in the mainland will expedite from 3.2% to 4.4% next year. The U.S. economy has regained growth in the third quarter. However, private consumption has started to slow down in growth. From now to the middle of next year, there will be about 100 to 125 points in hike in interest rates, and then the interest rate will remain high for a while. This will dampen investment and further drag down the economy. For the euro area, in the third quarter, the economic growth slackened considerably. Interest rates are high, and it's expected that for the Euro Central Bank, the policy interest rate will further increase by 125 points. It will further slow down demand in the next year. The situation in Ukraine and energy supply will continue to cause downward pressure for economy in Europe. Now, in the short term, the experts in the area will be under pressure. And then for new emerging markets, they may face outflow of capital. However, in the region, many economies have now resumed normalcy in the pandemic situation that will provide considerable support for the economy, for our local economic outlook. Now, in the coming year, external factors are still challenging. For exports of goods in 2023 will still be under tremendous pressure. While the mainland economy has continued its growth, it may be able to offset some of the negative factors. But then, now, if the interest hike cycles can end in the middle of next year, the situation may stabilize there. For export of services, the number of visitors will depend on our progress in resuming a normal boundary travel. Now, local demand will continue to be affected, but so long as the pandemic is under control and further relaxation of pandemic control measures in a risk-based manner, I believe the economy will gradually become normal. And now for the external inflation, there may be some moderation next year. And for local cost prices pressure, it depends on the speed of economic recovery. Next year, I'm going to announce the economic forecast for 2023. Although we face a lot of challenges, I am optimistic about the economic outlook. Last month, we held a number of major events, including the Financial Summit and also Rugby 7. That marked our path to recovery. Hong Kong is back. According to latest figures, our economic activities have improved in the fourth quarter. In October, the total retail growth was faster than last year. And then we have seen moderate growth in consumption. More major events in different areas will be held. We have the bike event, and next year also marathon. I hope we can all participate so that we can stimulate consumption and improve sentiments. Now, if the external environment doesn't deteriorate, and if our local pandemic situation is under control, then our economy will gradually regain its impetus to grow next year. Now, the second topic is on the budget. Should I continue? Yes, you may, because we are all concerned about the situation in Hong Kong and how you're going to help Hong Kong to handle the economic situation. And if members have no objection, you may go on to the budget consultation. Thank you. On the 22nd of February, I'm going to deliver the first budget of this term of the government. I want to consult members on the measures and the budget, and I will start my consultation very soon, so that in compiling the budget, we can better address the needs of different sectors of society. Because the external environment is ever-changing, and our economy is still full of challenges in the future. We should make good use of public resources to support grassroots so as to stabilize the situation in Hong Kong is the paramount consideration of the government. Given the weak economy, our revenue will be less than expected, and spending will continue to rise. Now, for profits and salaries tax, it will be lower than expected earlier this year. The weak property and stock market will also lower our revenue from stamp duty, and that would also affect land income from land. Now, in April last year, we have the employment support scheme, and then we are still spending a lot to help different enterprises. So the fiscal position will be rather weak. We'll expect to have over $100 billion of deficit, much higher than the projected 56.3 million in the original budget. And the reserves will drop to about 11 months of government spending. Now, because of the poor fiscal situation and limited resources, we will allocate resources for work that has to be done, and we will be prudent and will ensure that we live within our means, and we will spend where money is needed to ensure sustainability, and we must retain fiscal strength to cope with known and unforeseeable needs. We will continue to find new growth areas to increase our revenue, to consolidate and strengthen our economic recovery.
Chair, there are challenges in the short term, but there are plenty of opportunities in the mid to long term. The East is increasingly become the center of economic gravity. Hong Kong and East Asia will be the engine of growth for the world. Hong Kong is advantageously positioned. It's a gateway in this economy. We're in a position to seize the opportunities from development, but given the geopolitical tensions and deglobalization going on, there is polarization going on across the globe. There is also competition for resources between different economies. These developments bring challenges for Hong Kong's economic development. We need a paradigm shift in our city's economy to find a way out of these changes of a magnitude unseen in a century. We're combining a proactive government with the market, representing a fundamental shift from the previous thinking. There's a part that needs leadership from the government. The government will be taking proactive actions to create favorable conditions. At the same time, the government will leave room for the market to play its role. We will compete for enterprises and talent in a proactive manner to drive Hong Kong's economic growth. We will also create land and direct land creation. We will also enhance our infrastructure to enhance the capacity for economic development. We will also better leverage technology and the advantage it brings to diversify our industries and create stronger momentum for growth. In the report for the 20th National Congress of the CPC, the central government attaches importance to the role of Hong Kong in our national development. We have to make good use of the advantage under one country, two systems, and drive the development related to the 14th Five-Year Plan and develop our city into the 8 centers. We will also integrate ourselves into the national development through the Greater Bay Area development to create a bright future for our development. Chair, we prepared 2 PowerPoint slides for members. We have distributed a copy of those slides to each member. I will not go through the slides one by one. Instead, I will leave more time for the question and answer session, and I will be happy to take questions. Financial Secretary, would you invite Mr. Adolf Leung, the government economist, to walk us through the economy? Chair, I have already covered the part about our economy, so we will have more time for the questions and answer session. I will read out the names of the members who will put questions to the government. Mr. Chen Kim-po, Dr. Johnny Ng, Dr. Stephen Wong, Mr. Tony Tse, Mr. Robert Lee, Dr. Tan Yueheng, Ms. Elizabeth Kwok, Mr. Duncan Chiu, Mr. Louis Long, and Mr. Sunny Tan. 4 minutes for each member, questions and answers inclusive. We will first hear from Mr. Chen Kim-po. Thank you, Chair. In page 23 of the Chinese paper, we're seeing a drop in tax revenue for stamp duty that has to do with the weak property market. But we are also expecting to put COVID behind us next year, so that hopefully there will be an improvement in the figures next year. But then people have expectations about government support, like the consumption vouchers. I know the financial secretary is in a tough position. People have expectations of handouts, but then the government in a tough fiscal position, and we want to exercise fiscal prudence. So how will the financial secretary balance the different expectations and priorities? There's a need to increase tax revenue, but then you don't have control over the tax revenue. Economic stimulation, faster economic recovery, you get more revenue. If that does not happen, you will be under greater pressure. Then there is always the public expectation of handouts. What will the government do? Of course, the government cannot please everyone, so the government needs to manage expectations. We have been fighting COVID for years. We've spent a lot of money on that. Of course, we want to see less money spent on that, but then we always have to be prudent in spending public money. Of course, and there are things and you have to spend the money where necessary. So what are the plans of the financial secretary? Financial secretary, can you give us a sneak peek into your budget? Thank you, Chair. Mr. Chen has hit the nail on its head in his remarks. Now, starting from Q3, we're seeing some recovery in the economy. But overall, the economy is still in a weak state. People are under pressure. We just started a consultation exercise. In the days to come, we will listen to views in a humble manner. We will also be closely watching the economy and adapt to the changing circumstances. Mr. Chen just mentioned the need to have regard to fiscal prudence and spend within our means. I totally agree with Mr. Chen on this point. We keep an open mind. We will listen to different views and keep assessing the situation as it changes. Next, Dr. Johnny Ng. Thank you, Chair. The Financial Secretary just gave us a clear presentation. The economy is not doing well. There is external pressure and pressure at home. We're seeing wider drop in home prices from June to October. There's an 8% drop in home prices. In October, home prices represent an 11% drop from previous high levels seen in previous years. My question for the Financial Secretary, we've had curbs on the home prices. Many people have been put off by the stamp duties, even if they had wanted to buy another flat. Can there be adjustments to the curbs on home prices? My second question, it has to do with Hong Kong's demographics. We're seeing a net outflow of people. Now, it has to do with a range of reasons. Can we relaunch the investment immigration scheme to bring in high-quality workers and investment to reboot our economy? I thank Dr. Ng for his questions. The economy is not doing well this year, and then the Federal Reserve in the U.S. has increased the interest rates time and again, and we expect further interest rate hikes, maybe 100 to 125 basis points. So a lot of people are taking a wait-and-see approach. You can see that reflected in the transaction volume, which is on the low side. Compared with what we've seen over so many years, we have rarely seen such a low level of transactions. We're continuously watching the market. The curbs on the home market introduced many years ago were launched at a time when supply was limited. There were people who wanted to buy their first home. The measures were designed to help them buy their first home. we still believe in this idea. In October this year, we've seen an 8 to 10% drop in home prices depending on the district. But we'll keep monitoring the situation. As for people who want to buy a new flat and sell the old one, now the curbs will not have an impact on them. Now for the brain drain, the policy address has proposed measures to attract talent. So there will be a dedicated team, an office for attracting talent under the Chief Secretary for Administration's office. In our mainland offices and overseas economic and trade offices, there will also be a dedicated unit to attract talent. Now, the work is underway. As for the investment immigration scheme, we will have a budget consultation. We will listen to various views from the community and assess the situation. We had this investment immigration scheme. It worked for a while, but then things changed. We can have another assessment. Thank you, Financial Secretary. Next, Dr. Stephen Wong. Thank you, Chair. The Financial Secretary mentioned the poor economy and the unfavorable external environment. So there's a need to boost our competitiveness in the long term. In the previous budget, you proposed setting up a digital economy committee. There were 4 task forces. I want to follow up on their progress. How are these task groups coming along? Any performance indicators for them? I have 2 questions, one on expenditure, another on revenue. Now, you mentioned expenditure would keep going up. One key area is infrastructure. There is financial return on our infrastructure investments. We are looking at the financial deficit based on the cash flow, on a cash flow basis. But in the future, the investment will lead to financial returns. In presenting these figures, can the government consider presenting things showing that some investments actually lead to future returns? Of course, in some other cases, other expenditure may not lead to returns. Can the government clarify and present these things in a more clear manner? Now, turning to the question about the revenue, we're putting money into land, infrastructure, and attracting talent for emerging industries. Can we set goals in terms of the money that we will be making, the revenue that will be generated, given all the money we're putting in? Chair, I thank the Dr. Stephen Wong's questions. Now, for the Digital Economy Committee, there are 4 task forces. The task forces cover infrastructure, talent, and cross-boundary flow of data. A number of areas are covered. The task forces also look at possible digitalization in the government, and also how digitalization can drive the upgrading and transformation of various industries. I work with members, especially those from outside the government. They have put in a lot of their time. I have also invited various subcommittees to propose their recommendations.
As regards investment in infrastructure, you're very correct, Dr. Wong. Well, the government does assess internally investment in infrastructure, very often our assessment covers more than fiscal return, but economic benefits as well. Take transport infrastructure. Of course, you get a return from tolls, but some of them are toll-free. But then such transport infrastructure will help our commuters to save time, and that will bring economic benefits. And if we have a proper transport infrastructure, we also unleash land potential for further development. So there are both direct and indirect benefits. We have a certain threshold for assessment within the government, and there may be a time gap in cash flow because benefits can only be realized after investment for a while, and we can use financing to fill the gap. For instance, we have issued green bonds. The revenue is not for supporting recurrent expenditure, but rather for green infrastructure. For new emerging industries, now we are attracting enterprises and investment. If these enterprises require policy support, then they have to make undertakings on the degree and amount of investment and technology they bring in, and also number of jobs they can provide. We do not just look at financial return, but also economic benefits. Thank you. Mr. Tony Zhe. Thank you, FS. Well, we just heard from you that there will be some improvement next year compared to this still. But as you said, we expect a fiscal deficit of over $100 billion. And I think the extent of improvement is going to be limited next year. Now, as you all know, we are required by the basic law to exercise prudence in fiscal management, and we have to enhance the benefits of our expenditure. So for the coming budget, I have two suggestions. First, income from land premium usually accounted for over 30% of your revenue in the past. Now, you talked about creating favorable conditions for the site at Sai Street. I think the government has to do more to allow people to understand how are you going to support with the infrastructure, and you should not put in too many restrictions. I think you should remove uncertainties as far as possible so that investors can be more assured. That will help your revenue even if the market is weak. As for land premium, I hope you can also urge relevant departments to enhance efficiency, because for payment of premium, usually the procedures are very lengthy. This again will help you to boost revenue. In the coming 5 to 10 years, we're going to have the Northern Metropolis and also other developments. I support this because it's a form of investment. Investment in infrastructure is also important to future economic development. So we should not slow down investment in infrastructure because of the economic conditions. But you should think of new ways of financing infrastructure development. We cannot rely on our reserves every time. Perhaps you can consider fundraising or taking out borrowings and allow private investment. I think you should have an overall plan in borrowings. Thank you. Thank you, Mr. Zhe, for your suggestions. You are very correct. We should spend money where it is needed, and we adopt the same principle even when our financial position is tight. In allocating resources, bureaus understand that we are under financial pressure, and then we've asked the departments to review their expenditure and to make savings as far as possible. And if new services are needed, they should see whether they can replace some obsolete services for better resource allocation. And for revenue from land sale, I will follow up on the Sai Street item mentioned by Mr. Xi. Now, for terms in our lease, I understand that it would be much better if the terms are clear to remove uncertainties, to make the bids more competitive. Yes, I can agree to that. In some projects, we want to allow flexibility because we want to see whether the market has got a better solution for maximizing the potential of a site. As for payment of land premium, there is a dedicated team in the lands department responsible for larger items involving over hundreds of units. Usually, they will consolidate and coordinate with different departments, and then they will come up with the terms and make things move faster. But as we all know, the property market has been weak. And starting from the beginning of this year, we have seen some decline in prices. Given the current interest hike environment and the economy, I think there will maybe further adjustments in property prices. So in calculation of land premium, sometimes the developer will drag their feet in the land premium process based on their assessment of the market outlook. But I do agree with you that we should enhance efficiency in the land premium calculation process so as to suppress or to compress the overall timetable. Mr. Robert Lee, I've got two questions. One is on a balance between regulation and development. Second is about the Hang Seng Index. Honestly speaking, the economy is not really very bright, and presidency has asked us to enhance impetus for growth, and the C has said as a policy address that we should compete for resources, talents, and enterprises. But for some of the listing rules, some enterprises agree of the view that the compliance cost as well as the operating cost will increase in the future. Now, in the consultation document on regulation of futures, of course, this industry will not affect having an orderly and transparent market. But in fact, there are ample mechanisms on regulation of persons in charge and also competent persons, etc. Now, we want to develop the economy. And yet every day we see more and more restrictions and requirements. And I think this has made it difficult for the industry. Now, for the consultation document, there are higher requirements on capitalization. But for bio sciences, you only need a track record right now for the past 2 years. But under the new requirement, track record for the 3 years is required. If the market is booming, of course you can tighten control. But if the economy is already weak and we tighten control, how can the administration better balance regulation and development? Now I come to the Hang Seng Index. I'm sure there is an established mechanism for adding constituent stocks into the index. The HSI is an important indicator for global investors to view prospects in Hong Kong. Investors, of course, want return. If there is no desirable return, then it is hard to attract overseas investors. Now, the yield of HSI has been lowered because some of the constituent stocks, well, perhaps you didn't add them when they were on a rising trend, and they were added when their prices were at their peak. And so that was not very useful. So how do you balance regulation and development, and also how you deal with HSI? Mr. Lee, the administration's position on financial services is there must be appropriate regulation so that we have the trust of the international market. We have a good reputation of market regulation. Financial services develop very quickly and competition is keen. Let me quote an example. Recently, we issued a position paper on virtual assets. And after the statement was published, there were both support and criticisms. Some said that, well, recently a few virtual assets collapsed, and how come we have that statement? But there are people who supported our statement because in terms of innovation in finance and technology, it is an inevitable trend, and we must develop virtual assets. So we have to make good use of virtual assets to promote development. Of course, there are inherent risks, and regulation is needed. With appropriate regulation, these operators or platforms are willing to set up their business and develop in Hong Kong. So that was just an example. You mentioned the consultation paper. We welcome comments from you. You talked about the regulation of futures. Well, we're still during the consultation period. We are all ears to your suggestions. As regards 18C, the requirement of business records for 2 years or 3 years. Now, I'm willing to spend more time on this topic. In 2018, we reformed the listing regime. We allow new enterprises to go listed, and that has helped us to scale new height. We allow bio companies to be listed in Hong Kong, even they have yet to make any profits if they have attained certain developmental milestones, because it takes time for R&D to have outcomes. Now, we're number 2 in biotech fundraising after our reform. Now, apart from biosciences, we have also hard tech, where the R&D horizon is much longer. They may not be able to satisfy our requirements on profits and also track record. Now, to offer facilitation measures to these enterprises, they need to disclose more or longer period of their financial position.
Simply put, we need a balanced approach in regulating these businesses. We need to have regard to the quality of these companies and the development of the market. Mr. Lee also referred to the constituents in the Hang Seng Index. Now, this is a decision up to the company. We can have a discussion about this after the meeting. We can also raise this point with the company behind Hang Seng Index and have a discussion. Next, Dr. Tan Yueheng. Thank you, Chair. In Q3 this year, there was unfavorable external environment. In Hong Kong, we had counter-cyclical measures, including the consumption vouchers. The measure supported the economy. Otherwise, we would be seeing an even greater fall in our GDP. In the paper, there's a paragraph on the local gross domestic fixed capital formation. The investment in this area saw a widened drop in Q3. It's at 14.3%. That's the drop. The drop last quarter was 2% or so, so the drop has widened in Q3. Costs went up and the worsened economic prospect that led to poor business sentiment. So the investment in machinery, intellectual properties, etc., we saw a 26.9% drop in the expenditure. For machinery and intellectual property, the drop in the investment sends an important signal. We need not just the formation of infrastructure. Companies also need to spend on capital formation in machinery and intellectual property. So in the years to come, companies may be spending less on capital formation. Now we have the Innovation, Technology and Industry Bureau. Fixed capital formation is a key part of reindustrialization. The economy is seeing a slowdown. To achieve an economic recovery in the years to come, what can we do to support businesses? In terms of the technological transformation, can we provide low-interest loans and other financial assistance to take the financial pressure off businesses in terms of capital formation and encourage capital formation and increase the competitiveness of our manufacturing sector? I thank Dr. Tan for his comments and questions. He had an in-depth understanding of the issue at hand. We have seen a sharper decline in fixed capital formation. To drive our economic growth, we need three things: exports, consumption, and investment in fixed capital formation. Now we have covered the drop in exports. The economy is in a poor state. So the economic outlook is not looking good. When the economy is not doing well, people tend to be more cautious. Interest rate hikes are still on the horizon. Hong Kong is a small and open economy. Some describe our economy as very volatile. That is, the economy picks up and loses momentum very quickly. The investment in capital formation depends on a range of factors. We have only limited control over how things go on this front, so we encourage consumption. As for our future economic development, to create stronger impetus for growth, we cannot rely on our existing industries alone. They are important, but we need diversity. So we need to make good use of innovation and technology. The SAR government is trying to attract enterprises. We need to mitigate our underlying weaknesses and diversify our industries. Once we bring in enterprises, they will drive corporate investments in assets. If the economy looks up in the second half of next year, then we will see improvement in things. This year, the government has spent more on capital formation, but that is not enough to offset the decrease of corporate investments in capital formation. Next, Ms. Elizabeth Quat. The Financial Secretary mentioned there would be greater investment in innovation and technology. I support this move. In attracting enterprises, the industries have told us we need all sorts of talent, not just the high-end talent. So we want to see greater relaxation in this front. The economic outlook is not looking good with the worsened economic environment. The government needs to relax things so that we're not just stuck with the local talent. I'm sure the financial secretary is aware of the difficulties people are in. What plans does the government have to help people in the grassroots, small and medium enterprises, and tide them over the difficulties? This will be a tough question for the financial secretary. My question for Mr. Paul Chen has to do with the consumption vouchers. What's your take on the consumption vouchers? Will there be a new round of consumption vouchers to boost the economy? Many small and medium enterprises are complaining about the spike in electricity tariffs. People are having the same concerns. Can we have continued subsidies for electricity tariffs for sectors hit hard by COVID, like tourism sector and those tourist cultures? These cultures have been left idle for years. They cannot just be put in use right away. You need to repair, repair and maintenance, and that costs a lot of money. What sort of support will be available for them? We also have this target to reach carbon neutrality. We also want transport fueled by renewable energy. For cultures and public transport vehicles, we need to have vehicles running on renewable energy sources. Will the government consider matching funds? Can we leverage green bonds to help these vehicles adopt new energy sources so that they don't have to spend a lot of money on upfront on maintenance and then only to see a need to replace them with new energy vehicles? We know the government is in a tough financial position, but I do want to see what the government's position is. I thank Ms. Quat for her questions. These are things close to the heart of the people and small and medium enterprises. I thank her for bringing up these points. We appreciate the pressure people are under. I have visited wet markets myself. When we first launched the consumption vouchers, some experts at the Chinese University of Hong Kong conducted a study. The study shows that the consumption vouchers worked fairly well in stimulating the economy as compared with other economies in the region. We issued a $5,000 consumption voucher. People spent an extra $4,000 to $6,000. So the consumption vouchers worked in boosting the economy. So the vouchers led to a 1% or somewhere above 1% in boosting the economy. But the consumption vouchers have cost a lot of money in the public coffers. We're just starting the budget consultations. We will hear from various sectors of the community. We will also be watching the economy, and then we determine how to proceed. The member also mentioned the rises in electricity bills, that we will keep monitoring the situation. Turning to the difficulties confronting small and medium enterprises, we have to take into account all relevant factors. We have offered assistance on 3 fronts. SMEs struggle with liquidity issues, so we have the SME funding scheme, the 100% guarantee scheme for financing. We also take measures to minimize their operating costs. We lower government fees and other relief measures. The third point is to stimulate business, consumption vouchers being one of such measures. For the future, we will keep an eye on the situation and the economic outlook, and then we decide how to proceed. Next, Mr. Duncan Chiu. My question has to do with innovation and technology. We will be attracting talent and enterprises, but we also have to retain and nurture local talent. We have achieved some results. We have had some local tech startups, but over the past couple of years, some investors are taking a wait-and-see approach. There's also a drastic decrease in things on the mainland, so there's a drop in investment in Hong Kong startups. We have a shortage of professional investors. We thank the Financial Secretary for launching a raft of measures to support financing and incentives for investing in our local startups. But can the government speed things up? There's the Future Fund Growth Portfolio. It has taken 8 to 9 months to pick a target for the matching fund. When companies are selected, the contract work takes another 1 year, and then it takes more time for things to materialize. There's a great policy. We will be having this Hong Kong Investment Corporation. This is a timely measure. But can the government expedite things, make things happen more quickly? If we keep dragging our feet, even with our high-caliber local tech startups, they are struggling with funding. The policies take too long to materialize. The startups may have funding difficulties and decide to leave the market. How can we have the measures launched quickly and keep these tech-ups here? I have to declare an interest. I own a company as well.
FS. Thank you, Mr. Chiu. We greatly support startups. As you said, we have seen some results. We have about 800 startups in Hong Kong. We have a different basis to nurture startups such as the Cyberport and the Science Park. We have given them resources and support. Of course, a startup involves a few stages, and after it has stood on its feet, it has to promote development. There will be a second and third round of fundraising, and that explains why in the past we have got a few funds such as the Hong Kong Growth Portfolio, Tech Strategic Fund, and also GBA Fund, etc., hoping to help them at different stages of development and to make good use of our fiscal reserves to promote economic development and competitiveness. Well, I have noted the point you mentioned just now, and we will learn from this experience after after policy is formulated. It should be implemented faster. Now, for a forex, we use not to invest in Hong Kong projects, but now we have changed. And then the transition and also the identification of suitable partners and general partners. We did take some time, but I'm sure after we are established, we can move faster. We will go ahead in full steam, and then apart from SMEs, we can consider how we can further promote the liquidity and the financial position of startups, etc. Mr. Louis Leung, thank you. FS, I have got a question and 3 suggestions. First, on the harsh measures on the property market, I think you more or less expected this from me. In answering another member's question, you mentioned that you worried the supply would not be sufficient. But looking at the paper you gave to us and chart 9 and 10, in fact, there are no longer speculators in Hong Kong. Using your own words, the external environment is intricate and also ever-changing, and the outlook is rough. So you should stimulate our property market. And if you say that you're worried that we don't have enough supply, if you just look at the Kai Tak runway area, there are 12 sites there. We have a supply of 15,000, and the earliest population will take place next on March 2023. If we remove the harsh measures, there will be more flats available from the second-hand market, so that the second-hand market can be activated, and the obstacles should be removed and allow supply and demand to work. Now, for the harsh measures, they are major obstacles to urban redevelopment because a buyer's stamp duty has raised the cost of property resumption, because 30% of the income will be given to the government, and a refund can only be available after demolition. So can you consider removing the harsh measures on our property market? And I have got 3 suggestions for you. It's right that we exercise prudence in managing public finances, but when it comes to financing of large infrastructure, I'm sure we are in a position to issue debts for such investment. And you said that the payment of land premium may be slowed down because of the property situation. I hope if the valuation department and also lands department can track the market closer, then I'm sure things will be much smoother. Now, you want to stimulate our economy. Now, we should relax our inbound traveling measures. If risks are controllable, that will also help our economy. Thank you, Mr. Leung. With regard to the harsh measures on the property market, I think we have had ample discussion of that. In replying to another member's question, we want our property market to develop in an orderly manner. So we closely monitor the market situation. I would not repeat what I've said on the supply side, and also number of transactions. What I can say is we closely monitor the situation and we will introduce timely measures. And we will bear in mind the principles and objectives in launching these measures. You suggested whether we could issue bonds in order to raise funds for major infrastructure projects. We have considered that possibility because we do not want to delay investment in infrastructure, in transport, land, and housing in particular. Because of the government's fiscal position, we've considered issuing debts for that. And as for relaxation of quarantine and restriction measures for inbound travelers, I note your view and we will take that into account. Thank you, Mr. Sunny Tan. I'd like to follow on 2 points, FS. First, I want to thank the FS for your support to SMEs and the trade and industries in your budget. For instance, in ACIC, the Export Insurance Corporation has given us a lot of support. As mentioned by the FS, external risks are going to be high, and for those in the export trade, the counterparty risk between buyers and manufacturers are also unstable. So please continue to support us. In particular, to SMEs engaged in local market. Because I think our potential lies in the mainland domestic market, and we would like to see some support from the government for us. There are funds in the policy address to support SMEs. For instance, there is the BUD Fund. Now, the amount will be increased from 600,000 to 700,000, and the project worth can be $1 million. But I think there are very few enterprises that would raise it from 6 million to 7 million. So I hope you will lower the threshold for SMEs so that they can have more projects. Because it's quite rare for an enterprise to be able to have 6 projects, and it's useless even if you are going to raise the cap by 1 million. So do you understand the plight faced by SMEs? So please streamline the procedures for support to small enterprises so that they can also benefit under your various subsidy plan. Thank you for your suggestion. Yes. For our SMEs and also manufacturers, the mainland market is an important one. Or this is because of geopolitical conditions and also the country's decision to promote internal circulation. We should grasp this opportunity and we should help SMEs to do better in this area. We are happy to discuss with the sector what further breakthroughs are required in our policy. The mainland market is a big one, and there are tens of millions of enterprises in the mainland. It may be a bit difficult to assess the credit risk. we can further discuss as to how we can make it possible. Collaboration with the sector and also improved communication will help, and so that products can better suit the needs of the mainland market. I'm happy to follow up with you. As for the BUD fund, the purpose is to make it possible for SMEs to use it. It has been in operation for a few years, and even South Asian markets and those with free trade agreements with us are applicable. If SMEs face difficulties in making applications, they should let us know, because after all, we are here to help. Mr. Lam San Keung, thank you. FS. Given my limited knowledge in economics, I'd like to share with you two economic phenomena I have seen, and I hope the FS can enlighten me on that. Given that our economy has a downward trend and we've yet to see signs of recovery, and we may have crisis in the future, and yet we have seen a fall in unemployment rate, although the economy has yet to recover. And it's easier for employees with a limited experience to change jobs, seeing a pay rise as well, some as much as 20%. But for experienced and senior employees, their positions are not so secure. So I think it was a good policy to support enterprises, because the money is not for the boss. Rather, this is to ensure that employers will use money under ESS to pay employees, so that enterprises can continue to operate and we can retain talents. We hope that this will allow enterprises to survive, and because for some companies they rather wind up if they do not see any future. We will have a major infrastructure in the coming few years. We must give hope to employers so that they will continue to operate. Otherwise, they would rather close down, and then they are not going to come back to the market. Secretary, thank you, Mr. Lam, for your observation. Yes, you're very correct, Mr. Lam. While the economy is still weak, we have seen continuous improvement in unemployment. This rate stands at 3.8% now. There is limited room for further drop in unemployment in the coming couple of months unless we see a stronger and faster economic recovery. How come with a weak economy we're able to improve our unemployment rate? Why is the rate at a low level? This is because in the past few months, having regard to the pandemic situation and the poor economy, our community has been dealt a heavy blow. Now we need exports and also local consumption to help our economy. And now for investment in fixed assets, because of the current economic situation, enterprises are rather cautious. So in order to support the economy, we must heavily boost consumption. Now for catering and other services, most of the consumers are from the middle and lower income strata. So we want to help them. So we have used ESS and also consumption voucher scheme to help them. and they have proved to be useful. The unemployment rate has dropped to 3.9%, although the economy is still sluggish compared with 2020. Well, 2020 was a bad year, and we saw a rebound over 6% in 2021. Next year is going to be a difficult year, but it will not be as bad as 2020. The unemployment rate is on the low side, and many sectors are saying that they have hiring problems. Given the current situation, it may not be appropriate for us to have another round of ESS, but we'll closely monitor the situation.
Next, we will hear from Mr. Edmund Wong. Thank you, Chair. Just then, the Financial Secretary mentioned a slight recovery in the retail sector. But then go visit Nathan Road. Many stores are vacant. That is, vacant premises for stores. That is a stark contrast with what we saw in the past. Does the Financial Secretary have figures on vacant store space? My second question, apart from attracting talent and enterprises, there's also a global scramble for capital. At banks now, banks are offering 4 to 6% in interest for deposits or for 3 to 6 months. That is a risk-free investment. In this context, can we attract investors? Can we get them to invest in our market? My third question has to do with the regulatory framework and development. For small, medium, and micro enterprises, they are working hard. When the economy is poor or the regulatory measures are too harsh, these businesses simply decide to fold. More than 95% of our businesses are SME or micro enterprises. They are the foundation of our economy. We also need to bring in overseas companies and capital. There are 1.27 million Hong Kong registered companies. Only 110,000 are paying taxes. 80,000 of them have a taxable income. But when they set up businesses in Hong Kong, that is when overseas capital comes to Hong Kong, they invest in the local market. They bring in funding. But there's a perennial issue. Banks are reluctant to let these companies open a bank account. This has to do with the regulatory framework. Some improvement was seen over the past couple of months, but then things were tightened again over the past couple of months. So for the Financial Secretary, have you been monitoring the movement of funds in Hong Kong? And based on the number of bank accounts in Hong Kong, are we seeing a loss of bank accounts or loss of fund? Thank you, Chairman. For idle store front, the figure is roughly 10.2%. But as you can see, this has to do with the economy. The Ratings and Valuation Department conducts an annual survey. The figures for 2022 will be available only next year. Given the weak economy and the small number of inbound visitors, and even after some relaxation of the border control measures, we're seeing a far lower number of inbound visitors than before. That has a major impact on retail. We work hard on this. If the economy sees recovery next year and the COVID situation improves, and we see more visitors from the mainland and overseas, and the economy will improve. Turning to interest rates. This has to do with the interest hikes in the US, we expect the interest rates to pick up. It may not go as quickly as what you see in the US, but given the linked exchange rate system, interest rate increases are inevitable. For different banks, the deposit base varies. So each bank offers measures to get people to place their deposits in those banks. This is also an inevitable and short-term phenomenon. For overseas companies opening bank accounts in Hong Kong, the Hong Kong Bank Association has relayed these views to us. The HKMA will get in touch with the relevant sectors to find out more. After this meeting, I will talk to my colleagues from the HKMA. They will sit down and sort out the difficulties. We try to make things easier for applicants to open a bank account, but there are counterterrorism and AML, anti-money laundering regulations that we have to observe. Mr. Wong, you have further questions? I want to jump in here. The vacant store percentage was 11%. This has to do with COVID. Small and medium enterprises, the owners may be of an advanced age, and if they're seeing their business is no longer profitable, they may decide to leave the market. The chief executive said Hong Kong is back. There may be more inbound visitors, but then we have all these vacant store space. The catering businesses aren't doing well. I was at a banquet last month. They had a staff shortage. So the government needs to think of ways, especially for street side stores. We need to show people normalcy. Financial Secretary. Local businesses are adaptable. We are a small, open, and free economy. So things improve or worsen very quickly. If we can resume cross-boundary people flow, you will see more stores up and running. This also depends on the rents charged by the landlord. This is part of the market dynamics. We have to get the basic things right. We do what we can in the short term, mid-term, and long term. Financial Secretary, I know you are in a tough position. These are challenging times. Many measures have worked. Measures to support the market, measures to attract talent and foreign investors. You were on a Middle Eastern trip. I know it was a fruitful trip. Some investors would be visiting Hong Kong. There was a lot of money, a lot of investors at the Middle East, not just the Middle Eastern investors. Many in Hong Kong are still complaining about the lack of flights to Hong Kong. I know, Financial Secretary, you have been asking the airliners to make available more flights. I want to turn to support measures. We cannot just hold on to what we have. We also need to be more proactive. The government expects further monetary tightening by major central banks next year. That will also dampen demand from international investors. Hong Kong is a small and externally oriented economy. We are heavily reliant on investment and export. What will the government do to prepare and anticipate and respond to these external challenges? We cannot just stay on the offensive. We have to go on the offensive. Now, the economy next year is hardly any cause for optimism. There's been some increase in the number of inbound visitors, but we are hardly close to the pre-COVID levels. Very few mainland visitors to Hong Kong. Even at its peak, there were more than 50 million visitors from the mainland. So the absence of these visitors has had a major impact on our economy. We want to see these figures go back to normal. How can we ensure a much higher level of inbound visitors next year? Our retail, catering, and hotel sectors are heavily dependent on consumption by these visitors. What strategy does the government have to make that happen? I have been in touch with the commerce and industry sectors. We now have a 3-day medical surveillance in place for inbound travelers. That's a good thing for business travelers. But we need to give these people access to restaurants too. Business travelers have to have their meals in their hotel rooms only. We will also need help from the media to report on this point too. Can we set aside specific areas in hotels and get our top chefs to prepare local specialties like wonton soup in these areas? Some Hong Kong residents return from their overseas trips and they go to get a wonton soup or congee. So can we try something like that for our inbound travelers? And that's how we can attract more inbound travelers and investors. The economy will not be looking well next year, so I hope the government can come up with policies. For many businesses, they may be getting impatient. Early last year, I urged the financial secretary to provide relief instead of waiting. You cannot just wait till businesses fold until you lend a helping hand. Give them some help. Other members mentioned the difficulties confronting small and medium enterprises. I dare to say that these figures are not even fully reflecting the drop in exports. Our businesses have a lot in their inventory. They cannot sell their goods. They still have to pay for raw materials and workers. But getting bank loans has been tough. As Mr. Louis Long was saying, there were cooling measures in the home market having an impact on the economy. We're not asking you to scrap the cooling measures. We're asking for short-term adjustments. Say, when you have a lower collateral, businesses may take out smaller loans. Can we have adjustments a 5% drop isn't stable. Some in the government may see a steady drop as a stable adjustment, but businesses need support for their survival. Next year, the financial secretary and the chief executive may go on overseas trips to bring in overseas enterprises. That will take time to happen. But can we wait till after the Chinese New Year? Businesses are struggling. So I urge the financial secretary to launch another round of the employment support scheme. I know you're working with more constraints, but help those in need. Failure to do so means that these struggling businesses may fold after the Lunar New Year. How do we help relaunch our economy? What I've said is important.
Furthermore, we support the government in new developments, but the question still is, where does the money come from? The Lantau Tomorrow and Northern Metropolis, which we support, are going to be costly. I believe LegCo will not say no to funding applications for these projects. But the question is, Hong Kong is a highly transparent society, and so is the government. People know how much fiscal reserves we have, and they will compete with us. We don't want to be like Singapore when nobody knows or only a few know what is their fiscal reserves, whereas in Hong Kong we are highly transparent, and as a result, people can attack us knowing our level of fiscal reserves. So can we consider using some new ways to handle this? The government keeps saying that they don't want to backpedal. While we have seen some rising trends in the pandemic, but still things are manageable. After this harsh winter, can we bring hope to our people in spring? What good measures do you have to help Hong Kong to ride out the storm here? Some have suggested that there can be electricity tariff subsidies or water tariff subsidies, but what if they have no business? Can we have another round of ESS to keep them alive at least? FS, thank you. Chairman, you are very correct. We cannot always be on the defensive. We have to be more aggressive. We have to take the initiative to not just to revive our economic activities, but to resume normal growth. And we should provide better quality jobs for members of the public so that we can all benefit. There is still a lot to be done in the coming year, starting from the end of October when we have the Finance Summit and then the Hong Kong Finance Week, and then in early November we have the Economic Leaders Summit. And I think the sentiments of society is positive. From what I gathered on front line, I think the international community is more positive about Hong Kong. I met representatives from global financial institutions, large enterprises. Some of them are CFOs and CEOs. They wanted to understand more about Hong Kong, and they came to talk with us. And many large banks and corporations. These are multinational corporations. They have placed their board of directors to Hong Kong. Some have placed their Asia Pacific region boards and some of the global blocks, and some they're holding meetings for these boards in Hong Kong and brainstorming sessions here, because they see that Hong Kong has come back and we welcome the international community and all sorts of visitors to come to Hong Kong. They are all encouraged. I visited the Middle East and Indonesia, and this chief executive visited Thailand. After 3 years of difficult days, many people in the international community did not have a full understanding of Hong Kong. Some were influenced by biased reports of Hong Kong. So we were able to tell the Hong Kong story to them, to answer their concerns. We invited some of them to come to Hong Kong when we were in the Middle East and Thailand and Indonesia. We invited their high-level deputations to come to Hong Kong. So we have to publicize Hong Kong. We cannot just rely on government efforts. So we have mobilized the business sector as well as other sectors to help. Because in our respective positions, we are doing our part to tell the China story and the Hong Kong story well. And we also compete for talents and enterprises. Mr. Lam mentioned his worry about individual SMEs because the drop in asset value of the collateral, they might face loans being called by banks. I don't think this will happen because we have been in charge of the Hong Kong MA, and usually this is not going to happen. In the past, when we faced similar challenges, we reviewed the situation. We provided principal holiday, and then some of the loans have been restructured to increase the term, to lengthen the term. And if individual enterprises have encountered these difficulties, they can come to Hong Kong MA and we'll see whether it's just an isolated situation or has there been misunderstanding. As for ESS, I would not repeat what I've said. I just want to add one point. Given that our economy outlook is weak, SMEs as well as members of the public face pressure, and our fiscal position is tight. How should limited resources be spent? I think all people have different views. If limited resources is deployed where we can give direct help to members of the public, or if we deploy such resources to help enterprises, there may be different views in society. As regards where money comes from, we only face short-term problems. We will ensure financial stability and security. Meanwhile, we will promote economic development. Short-term difficulties and cash flow difficulties with infrastructure projects can be addressed by issuance of debts. That will help us to overcome the short-term difficulties. We will be prudent at the same time. We will fully utilize our good credit reputation and make use of various tools available in the market. Thank you. FS, myself and legislators and members of the public have confidence in you. I'm sure we can raise funds or take out borrowings or issue debts. But some members of the public may not have a full understanding. We're going to spend over $1 trillion in the coming couple of years. If we have a higher degree of transparency and make it clear to the public, just to assure them, so that will be better for the community. All right. I have another question to be on the offensive. There are many Belt and Road Initiative countries. The government has encouraged us to invest in these countries and to look for opportunities. We have the Export Credit Insurance Council. The purpose is to help companies by means of insurance coverage to invest in new economies. And I was once chairman of ECIC. Can we raise the amount a little bit more? Now, because we need to go out, and can we adjust the amount of credit insurance available? Thank you. The same question was asked by Mr. Sunny Tan. I will ask my colleagues to study this issue and come back to you later. All right, Mr. Louis Leung. Thank you, Chair. I would also like to discuss with the FS our offensive and defensive measures. Now, when it comes to the defensive, I think we did a very good job after the Rugby 7 and also the financial summit. Our reputation is very much different, and we also support the FS visit to the Middle East. The business sector will for sure support you. Now, if we can together tell good stories of Hong Kong, I'm sure the effect will multiply. And what about financial security? We all understand that the linked rate has served us for more than 4 decades and is a proven system. The Monetary Board will not allow speculation, but whenever there is an adverse turn in our economy, the major speculators may come to attack us, and they would like to manipulate our weak Hong Kong dollar position, and that Hong Kong will sooner or later give up its linked rate system. Can you say categorically here that we're not going to abandon our linked rate system? Because general members of the public may feel threatened when they hear what international speculators say, and they may have concerns about their deposits in Hong Kong. Can you use this occasion to tell the public we have the determination and capability to safeguard the linked rate? Thank you very much, Mr. Leung, for raising this very important point. Some hedge fund managers and risk fund managers from time to time make remarks about Hong Kong. Looking back in history, people who smeared our link rate have incurred heavy losses in their own portfolios. So they or maybe making such remarks to encourage other speculators to help alleviate their position. Now we are monitoring the market around the clock. We monitor the monetary market, and whenever there are risks, we have a warning system. We have not seen signals of such risks, and we have not seen joint action from hedge funds to attack our link rate system.
The linked rate exchange rate system has been in place for 40 years. It has worked well. It's a key part of our financial stability. There's no need to review this system, and we have the capability to safeguard the system. We have foreign exchange reserves. That is 1.7 times of our currency base. We also have a robust banking system. We have a 20% reserve ratio, while the international requirement is only 8%. We have provisions for bad loans. That's 1.1%. This is way lower than other places across the globe. The linked exchange rate system is so important to us, and we have the backing of our country. So there is no need to review or tweak the linked exchange rate system. Thank you. Financial Secretary, your remarks will go a long way to reassure people in Hong Kong. I hope you can deliver on the things proposed by many members today. And I hope you can show us the good news either in your budget or sometime before that. We will wrap up this item. I thank the members for their comments, and we will follow up accordingly. We now move on to the next item on the agenda. This is the proposed enhancements to the position limit regime for the derivatives market in Hong Kong. We will welcome representatives from the Financial Services and the Treasury and the Securities and Futures Commission. Whenever you are ready, you can start walking us through the paper. Mr. Joseph Chen, whenever you're ready. Chair, members, I'm joined by my colleagues from the SFC to brief members on the proposed enhancements to the position limit regime for the derivatives market in Hong Kong, and we're happy to take comments from members. Our position limit regime was introduced in 1999 in the wake of the Asian financial crisis. This is an integral part of our system to maintain stability and transparency in the system. The SFC is empowered to prescribe position limits and large open position reporting requirements for futures and options contracts. The SFC reviews the regulatory regime regularly to make sure the system keeps pace with the latest requirements and the market needs. The SFC reviewed the regime in early 2022 and proposed a range of enhancement measures. There are 4 kinds of measures. First, with regard to new products, to prescribe new position limits and reporting requirements. Second, clarifying existing statutory requirements. This is about bringing in a mechanism to issue permits for those holding position in excess of limit, and also requirements regarding large open position reporting, and also the application of prescribed position limits and reporting levels for sub-funds of umbrella funds and unit trusts. And third, with regard to the proposed enhancements from the Hong Kong Exchange and Clearing Limited, we propose consequential amendments to align the relevant requirements. And finally, change in the regulatory approach for international contracts to promote development. This is about boosting our competitiveness and drive product development. The details are set out in the paper, Chair. Our position limit regime has always been effective in monitoring market risks. The enhancements will also ensure the system works better. The SFC and the HKEX consulted the market in April and June this year. Recently, the SFC released another consultation paper to invite comments on certain enhancement measures. The consultation will end on the 23rd of December. Subject to sub-members' views and further market feedback, we aim to table the proposed rule amendment before the Legislative Council for negative vetting in the first half of 2023. That concludes my presentation. My colleagues from the SFC and me will be happy to take questions and listen to members' comments. Thank you, Mr. Joseph Chen. We will now start the Q&A session. Dr. Tan Yueheng. Thank you, Chair. This is a proposal made with regard to changes in the market and business needs. There will be adjustments and enhancements to the regulatory regime on derivatives. I support this proposal for futures and options, and also the removal of the limit on single stock options. We need to keep the risks manageable. The proposal provides flexibility for the market. The proposal will also help enhance liquidity in the market. The proposal also reflects a balance between regulation and development, something that this industry has been calling for. But these enhancement measures target stocks. But for fixed interest assets and currency-related derivatives, will the government look into enhancing the derivatives concerning fixed interest assets and currency-related derivatives? In 2018 and 2019, the HKEX released a report on derivatives. The report analyzed investors' plans. So over the past couple of years, 3 years have elapsed. Do we have any study on whether there are changes in the demographics of investors and what they're looking for? I thank Dr. Tan for his questions. In formulating these enhancements, we strike a balance between the needs for market development and regulation to ensure stability and healthy development in the market. Dr. Tan raised a question about other fixed interest products and other derivatives related to currencies. I want to invite my colleague from the SFC to share their observations on the latest developments. I thank the member for his questions. As the member pointed out, we cannot rely on equity-related derivatives alone. So apart from derivatives based on stocks, options, and futures, we're also proposing adjustments to the cap on the position. So covered is the USD to RMB options and futures. We look at the needs and development of the market as a whole. Our financial market is focused heavily on stocks. That's why the proposed enhancements have mostly to do with stocks, but we also cover derivatives related to currency-related stocks and options. Now, as to the structure of investors, we don't see any major changes in these areas. For the market of stock of futures and options, the users are usually investment banks or funds. There's a very limited degree of participation from individual investors. Any other questions? Mr. Ambrose Lam. This paper touches on very technical points. So based on my limited knowledge, I want to put these questions to the government. There's a cap on the number of derivatives contracts each participant can buy. When market volatility is seen, do these caps have anything to do with previous volatilities in the market? I thank Mr. Lam for his questions. For these position limits on the derivatives, we set these caps with reference to market capitalization and liquidity of these stocks. As for the details, I will invite my colleagues from the SFC, Mr. Rico Leung from the SFC. As the Undersecretary just said, we set these position limits based on these factors. We look at this market, the options and futures, we look at the stocks, the underlying stocks. Market capitalization and liquidity are what we look at. But as the stock price, this is not something we take as a reference. We set the position limit when market volatility happens. They should not undermine the stability of the financial market. The position limit is there to make sure there's no systemic risks to the financial market. Chair, a follow-up question from me. When you see market volatility, do you see investors reaching the position limit? Chair, when there's market volatility, the position is relatively stable. Some investors actually reduce their holding. In normal times, investors increase their holding. When the market is stable, some investors buy options and futures to hedge against the risks. In times of market volatility, there's limited change in the positions. Any other questions from members? Based on the paper from the government's plan is to table the proposed rule amendments before the Legislative Council for negative vetting in the first half of 2023. Any comments from member on this proposal? Are we all agreed on this? In that case, we thank the government and SFC representatives for joining us for the meeting. We'll move on to the next item on the agenda, any other business. Any other business from members? If there's no any other business, that concludes the meeting today. Thank you.